Hello everyone, my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this Inter CA RTP for November 2023. So what I've done is I have marked the answers and the approach for each and every line so that we can quickly wrap, as I understand that your exams are very close. Now, this Inter CA RTP is a easy RTP, and remember one important rule. Whenever there is a case study based MCQ, first read the questions which you need to focus on and then read the main part of the case study so that you are able to quickly answer and your approach would be as required in those questions. So when you have first read the questions and then you read the main part, what automatically happens is your brain starts working towards those answers. So let's now start with the RTP. So first, obviously, let's see what they want. They need the aggregate turnover of Bali Bells for September. Bali Bells wants to avail ITC on GST paid on heavy steel machine purchased in September. Which of the following statements are true in this regard? So we'll have to focus on what would be the treatment for GST with respect to machine. Whether Bali Bells can avail ITC on free samples of goods distributed for the month of October. Free samples, you very well know, block credit section 17 bracket 5, you will not be eligible for ITC. So some answers you will get even without looking at the main part of the case study. Bali Bells can claim ITC on inputs received in July of preceding financial year up to dash of current financial year. Time limit to avail ITC is 30th November or date of filing annual return, whichever is earlier. Compute the value of supply under section 15 made by Bali Bells for the month of November. So we'll have to focus on value. So it's based on value, aggregate turnover, ITC related questions. Now let's see the main part. Bali Bells, a private limited company registered in Chennai, Tamil Nadu, provides the following outward supply for September. There is intra and inter, there is taxable and exempt. All four will form part of aggregate turnover. So 40, 30, 15 plus 10 comes to 95 lakh. We are very sure about this. Then let's see what has happened. Bali Bells sold land of rupees 2 crore in the month of September. Negative list. Will negative list ever form part of aggregate turnover? The answer is no. So we will have to ignore this for aggregate turnover purpose. So our aggregate turnover will be 95 lakh. Bali Bells purchased one heavy steel machine in the month of September for 1 lakh excluding GST of 18%. Bali Bells capitalized the value of machine along with GST paid on the same in the books of accounts and claimed depreciation on full value of the machine. Now once you claim depreciation on full value including GST, are you eligible for ITC? The answer is no. So in this case, you will not get ITC of GST paid on machine. Apart from this, Bali Bells has a tax invoice dated 25th July last year with respect to inward supply of 50,000. The company has not availed ITC on the said invoice yet. They can claim it by 30th November or date of filing annual return, whichever is earlier. As the information of date of filing of annual return is not given, the answer would be 30th November. Bali Bells distributed some free samples of goods in the month of October to its customers to promote sales. Eligible for ITC? No. Block credit section 17 bracket 5. Bali Bells made a supply during November, the details of which are as follows. Basic price before TCS 45,000. Obviously this is part of value. TCS under Income Tax Act. No, CBIC has clarified that tax collected at source under Income Tax Act will not form part of value. It received subsidy of 3,500 from Bharat Foundation for usage of green energy, and subsidy was linked to unit of energy saved, not to the product. Oh, it's not linked to the product. If it is not linked to the product, then there's no question of considering it. So what we will do is we will ignore this. So the right answer will be 45,000. This will be the value, because subsidy which is not directly linked to the supply will not form part of value for this purpose of section 15. Okay, so let's see the answers. First, aggregate turnover 95 lakh. We are clear with this. Heavy machine, can you claim ITC? No, you cannot claim ITC. Free samples, can you claim ITC? No, you will not be eligible for ITC. Block credit. Last date for availing ITC for July last year, 30th November. And value of supply for November month will be 45,000. So you'll quickly be able to solve it if you first read the questions and then approach the MCQ. Fine. Let's see the next one. Chill Limited, Delhi, a registered supplier of manufacturing machineries, has made the taxable supply of machine during the month of March. It has furnished the following details for each machine supplied. List price exclusive of taxes. Will it form part of value? The answer is yes. Subsidy received from central government for supply of machinery to government school, exclusively related to supply of machine included in one. This does not mean 2 lakh is included in one. It means that it is exclusively for that particular machine which is included in one. Exclusively for that machine which is included in one. English. Institute is trying to play with English. It's not included in that. It's saying it is exclusively for that machine which was included in one. Then there is NGO subsidy, same wordings. Tax levied by municipal authority, packing charges. Now let's see the additional information. The list price of the machine is after considering two subsidies. That means you have already deducted these two in 10 lakh. You have deducted it. Now government subsidy which you have deducted, will you deduct again? No, because it will lead to double deduction. So what we will do is we will ignore it. NGO subsidy, you have already deducted it because you have already considered in this 10 lakh. So other subsidy if you have already considered, you will have to add back because you have removed something which is liable to GST. So this you will add back. However, other charges are over and above the list price. Municipal authority taxes will get added. Packing charges, incidental or ancillary, will get added. So the value will be 10 plus 2, 12, 14.5, 15.75. This will be the value. And then let's see. Further, the company has provided the following information related to purchases for the month of March. Let's see what they have purchased. Raw material to be received in the month of April. Obviously, lots or installments, you will get ITC only after receipt of last lot or installment. So no ITC in the month of March. Membership of club, not obligatory membership of club. It's a block credit. You'll have to write proper notes for all this. Don't forget that. You get marks for not just solving it correctly but writing proper notes related to the provisions. Input received in 6 lots, out of which first lot has been received. Again, you will not be eligible for ITC. Truck used for transportation of raw material. Yes, truck should be eligible for ITC. Capital goods. out of 3 items, 2 items is missing, invoice is missing, and GST paid is 282. So if you don't have the invoice, if you don't receive the goods, then there is no question of availing ITC, because these are the conditions to avail ITC. You remember the conditions to avail ITC. So 282 no ITC. So out of 350, 282 not eligible, 68 will be eligible. So ITC totally will be 1.5 lakh plus 68. Total ITC will be 2,18,000. Rates of GST are given. Inward, outward are exclusive of taxes. All conditions are satisfied. All are interstate supply. Oh, all are IGST. So this is my total ITC. Now 15,75,000 into 18%. This becomes my output. Now my output minus my ITC. This is the tax payable. So the answer will be 65,500. Present the output, present the input, write the corresponding notes, and give an answer for output minus ITC. That's how the answer would end. There's no need to do CSI in this case, because they've said all the transactions are interstate. So we can just have one column of IGST. Yes? Okay. Then let's see the next one. Eden Limited, registered under GST, dealing with educational toils, has an aggregate turnover of 18 crore last year. The tax consultant advised it to issue e-invoice mandatorily in the current financial year. However, Eden is of the view that since his aggregate turnover is less than the threshold limit applicable for e-invoicing, so it is not required to issue e-invoice. Comment on the validity of the statement. Required, not required? Obviously required. Reason: now the limit for your exams of November 23 is 10 crore. If in any of the preceding financial year starting from 17-18 the aggregate turnover was more than 10 crore, then e-invoice is required. Okay, government department is registered under GST. Its aggregate turnover last year was 2 crore. You are required to comment with the help of relevant provisions whether the said department is required to raise e-invoice. The answer is no. SEZ unit, banking company, insurance, transportation of passengers, GTA, multiplex screen, government department. These are not required to issue e-invoice, even if their aggregate turnover exceeds the threshold limit. So you'll write all those who are not required, and then you'll conclude saying that government department will not be required to issue e-invoice. Okay, let's see the next one. Patra Limited, a normal taxpayer, is winding up its business in Rajkot. Tax consultant of Batra Limited has suggested that Batra Limited will have to file either annual return or final return at the time of voluntary cancellation. Do you agree with the stand of tax consultant? The answer is no. When you are winding up, first for that particular financial year you will go ahead and file annual return, and thereafter you are also required to file final return. So the statement of either annual return or final return is wrong. In fact, both the returns will have to be filed by Batra Limited. So you can provide both the provisions and conclude that both are required. Your language in this will play a very vital role, and that's how determination of marks is done by the examiner. Okay, let's see the next one. Mr. Shamnath, a registered person, has caused movement of goods of consignment of value exceeding 50,000 in relation to a supply, thus generated e-way bill. However, after generation of e-way bill, he found a mistake in the e-way bill and wants to edit it. He is editing aloud. No, if there is a mistake, then you'll have to cancel it, and that too cancellation can be done within 24 hours. So cancellation has to be done and a fresh e-way bill has to be generated. There is no question of editing the e-way bill once generated. You are required to advise Mr. Shamnath. What would you say? You will provide the cancellation provision. You will provide editing is not possible, and you will advise that this is not possible. So cancel it and issue a fresh e-way bill. Okay. And the last one is examine the implications of GST on payment of honorarium to guest anchors. Guest anchors who appear in various debates on news channels. So guest anchors are paid a fee. Now, whether GST is applicable on that? The answer is yes, because they are not independent journalists. They are guest anchors where there is no exemption in the exemption notification, that is 12/2017. So as there is no exemption, it would be liable to GST. And also mention that, say suppose the aggregate turnover is below the registration limit, below the threshold limit, then in that case no need to register. But if it crosses the threshold limit, then registration would be required. That is how you can present your answer. This is based on the circular issued with respect to guest anchor. So this was a small discussion on RTP. I have kept the answers here so that you can quickly go through, because at present time is the most essential aspect for you. Wishing you all the best. Take care.